Hello everybody and welcome back to another video. Today we have a CoinDesk article which profiles A7A5, and for those of you who do not know, not many do to be fair, it is a ruble pegged stablecoin issued by entities in Kyrgyzstan with reserves held at Russian PSB. It was launched in early 2025 where it experienced explosive growth, adding nearly $90 billion to its circulation supply, outpacing major dollar stablecoins like USDT and USDC, according to Artemis data. Now, this surge stems from its role in facilitating cross-border payments from Russian businesses and their trading partners in Asia, Africa, and South America, helping bypass Western banking restrictions due to sanctions on Russia. Oleg Ojenko, A7A5's Director for Regulatory and Overseas Affairs, defended the project in an interview at Consensus Hong Kong, where he emphasized full compliance with Kyrgyz laws, regular audits, KYC, AML procedures, and adherence to FATF principles, insisting we do not do illegal things and that criminals are not welcome. However, its affiliated entities and Reserve Bank PSB are sanctioned by the US Treasury and UK and EU in related actions, limited interactions in dollar-based systems, and raising secondary sanctions risks. A7A5 enables indirect access to USDT liquidity via DeFi pools. Ojenko views sanctions as an obstacle, creating demand rather than halting trade, and he aims to capture over 20% of Russia's trade settlements with non-Western countries. The company is expanding to more blockchains. They are already on Tron and Ethereum and are seeking partnerships with exchanges despite challenges like reluctance from centralized platforms and incidents where sponsors later distance themselves. It cannot yet be used directly in Russia, pending stablecoin regulations, and positions the firm as neutral businessman open to cooperation with any country. Broader reporting frames A7A5 as a major tool in Russian sanction evasion, with transaction volumes exceeding $100 billion in under a year and driving much of the surge in sanctions-related crypto activity in 2025. So I have done a pros and cons list here. So we've done it as pros as a crypto community, not as Europe, UK versus BRICS and all that. So we have rapid growth and market demand. Explosive adoption shows strong real-world utility for cross-border payments in sanctioned environments, filling a gap left by restricted traditional banking. Then we have compliance in jurisdictions of incorporation, operates legally under their local regulations, which claim the KYC and AML, audits, and FATF alignment, providing a defensible position in non-Western jurisdictions. Then we have alternative to dollar dominance, enables trade settlements in rubles, so they don't have to deal with USD and SWIFT amid their restrictions. We have DeFi integration and liquidity access, allows swap to USDT by decentralized protocols, offering indirect global liquidity without direct dollar holdings. Then we have ambition for scale. The goal of handling over 20% of Russia's non-Western trade settlements positions them in a potential major player. And business reliance. Sanctions create the very demand driving growth, turning restrictions into a competitive advantage. That being said, their 24-hour trading volume for A7A5 is only $11,000. So take that as you will on what they say to what it says on CoinMarketCap. And we have the cons: heavy sanctions exposure, key affiliates, Their banks, US sanctions, EU sanctions, UK sanctions, and the risk of secondary sanctions for users, partners, or exchanges that interact with it. Limited mainstream adoption. Centralized exchanges avoid listing due to sanction risks. Liquidity is low and mostly confined to the DeFi pools, restricting accessibility and scalability. Then we have geopolitical and reputational risks, association with sanctions, evasions. You don't want to be part of that. Regulatory uncertainty, not yet usable in Russia, and broader Western crackdowns could further isolate it. Backing and stability concerns. It relies on Rupal deposits at a sanctioned bank. Rupal volatility and geopolitical pressures could undermine peg stability. And perception as an evasion tool, which I believe everyone will see it as, which is widely viewed by Western sources as facilitating sanctions, circumventing potentially, inviting more enforcement actions, and limiting long term growth in global crypto systems. That's it for today. Please do like and subscribe, and I'll see you in the next video.